Hello and welcome students. In the last video lecture I had explained you question number 13 of chapter number 2, that is final accounts of partnership firm. Now in this video lecture I am going to explain you question number 15 of your textbook, that is on page number 84. As you can see on the board, I have prepared trading account, P&L account, partners capital account and balance sheet as on 31st March 2017. I have not prepared P&L appropriation account because there is no entry related to P&L appropriation account. That's why whatever the profit comes of the of the P&L account, that I have directly transferred to partners capital account, considering it as divisible profit. Okay, so let us read one by one all the entries and do the posting in the concerned account. With consideration of following trial balance and adjustments of Harsh and Yesha, there are two partners, Harsh and Yesha. Prepare final accounts for the year ending on 31st March 2017 of their firm. Trial balance is given to you, and which debit balance and credit balance are given to you. Capital and drawings. Capital of Harsh and Yesha, that is 35,000 and 15,000. Capital will always be having a credit balance. So you can see on the partners capital account credit side that I have written by balance brought down 35,000 and 15,000, and the drawings that is given to you of Harsh and Yesha, that is 5,000 and 2,500. So on the debit side of partners capital account, I have written the first entry, two drawings, that is Harsh 5,000 and Yesha, that is 2,500. Then afterwards goodwill that is given to you 5,000, that is one kind of asset, so it will be recorded in the asset side of balance sheet. So goodwill in the outer column 5,000 because there is no any adjustment on goodwill. Then afterwards patent and trademark, that is given to you 2,700. Now patent and trademark, that is also an asset, intangible asset, so it is also written on the asset side of balance sheet, that is patent and trademark, that is 2,700, that I have written in inner column because there is an adjustment on it. Okay. Then afterwards receivables and payables, that is 31,000 and 25,000. Whatever is debit balance, that would be receivables, and whatever is credit balance, that would be payables. Okay, so we can write receivables also, we can write debtors also over here. In the same way we can write payables also, we can write creditors also. Okay, both are one and the same. Over here I have written as it is receivables, that is in inner column 31,000 because there is an adjustment. So after giving the effect of adjustment, the total would be written in the outer column. In the same way, on the liability side of balance sheet, I have written payables in the outer column, that is 25,000 because there is no any adjustment related to payables. Okay. Then afterwards accounts of goods, that is 40,000 and 89,250. Now account of goods, that means purchase and sales. Whatever debit balance is given to you, that is purchase, and whatever credit balance that is given to you, that would be your sales. Okay, so that will be recorded on the trading account. You can see first entry always in the trading account, that would be of opening stock, and last entry in the trading account on the credit side, that would be always of the closing stock. After opening stock, second entry should be of purchase. To purchase, that is debit balance, that is 40,000, and credit balance that is given to you, that is buy sales, that is 89,250. Both I have written in inner column because there is another effect in the trial balance. There is no any adjustment, but effect of trial balance is there related to purchase and sales. Next one, that is machines, that is office given to you in bracket, it is assets 15,000. So you can see on the asset side machines directly in the outer column because no any adjustment is there in it. Then afterwards opening stock, that is given to you 6,000. So opening stock always first enter in the debit side of trading account to opening stock, that would be 6,000. Then afterwards furniture, that is given to you 3,000. So furniture in inner column because adjustment is there, so furniture in inner column, that I have written rupees 3,000. Then afterwards goods return account, it means purchase return and sales return. Now purchase return will always be having a credit balance and sales return will always be having a debit balance. Okay, so over here the goods return account, in that 7,500, that is sales return, and 5,000, that is purchase return. Okay, so you can see I have subtracted from purchase minus purchase return, that is 5,000, and from sales I have subtracted sales return, that is 7,500. Only one effect of this. Okay, so 40,000 minus 5,000, outer column 35,000, over here 89,250 minus 7,500, outer column 81,750. Then afterwards Wages that is given to you 4,000. Wages will be recorded on the debit side of trading account, not P&L account. Okay. So you can see debit side of trading account to wages that is 4,000. Then afterwards depreciation on furniture that is given to you 300. Now students, in the adjustment number 4 also provide depreciation on furniture at 10% is given to you. Now students, make it clear, if the depreciation is given in trial balance also and the adjustment related to that asset for depreciation is also given to you, then whatever the depreciation that is given in the trial balance is to be added first of all to the concerned asset. Okay, so you can see on the asset side furniture which I have written in inner column, that is 3,000 plus whatever the depreciation of trial balance. See, I have written in short form, that is TB, means trial balance, that is 300 given to you, that I have added. So total that came to 3,300. Now on that, whatever the adjustment effect, that is 10% depreciation, that I will count on 3,300. So 10% depreciation on 3,300, that would come to 330. So in outer column, after subtracting these two values, I have written 2,970. Okay, so only the depreciation that is given in trial balance will be having only one effect, and that we have to add in the concerned asset. Okay, so that I have done over here, and then afterwards I have calculated the depreciation that subtracted from it, and the value that came afterwards, that is written in the outer column. Next one, after completion of depreciation furniture, then after stationery and printing, that is 1,550. That is one kind of expense. So it is written on debit side of P&L account, that is to stationery and printing 1,550. Then afterwards, building that is given to you 46,000. So on the asset side, building in inner column, because adjustment is there on it, so in inner column I have written 46,000. Then afterwards, legal charges that is given to you 6,500, that is an expense, so debit side of P&L account. Two legal charges that is written in inner column because there is an adjustment, so in inner column I have written 6,500. Then afterwards, cash balance that is given to you 300, so on the asset side cash balance, that is 300. Then afterwards, railway freight, that is 600. Now railway freight, that is expense related to goods. Okay, so it will be recorded on the debit side of trading account. So you can see on the debit side of trading account I have written short form to RF. RF means railway freight, that is 600. Then afterwards, insurance premium that is given to you 1,150. So that would be an expense. So to insurance premium, debit side of P&L account 1,150. There is no any adjustment, so directly in outer column. Then afterwards, bills that is given to you, whatever debit balance, that would be bills receivable, and whatever the credit balance, that would be bills payable. So bills receivable, that is 4,000, that would be on the asset side of balance sheet. Bills receivable, that is 4,000, and bills payable, that is 2,500 on the liability side of balance sheet. Then afterwards, postage expense that is given to you 2,000, that would be on the debit side of P&L account. So two postage expenses, that is directly in outer column, that is 2,000. Then afterwards, bad debts and bad debt reserve, that is given to you 1,500 and 2,000. Now these two values are given in the trial balance. Also in the adjustment also it is given to provide bad debt reserve. Okay, so first of all, whatever the format that we are knowing how to prepare a debit side of P&L account, that I have prepared over here. You can see two bad debts of trial balance plus bad debts of adjustment plus bad debt reserve of adjustment. The total of these three, from that you have to subtract bad debt reserve of trial balance. Okay, so over here the bad debts and bad debt reserve of trial balance that are given to you. Okay, so bad debts of trial balance that is given to you 1,500, and bad debt reserve of trial balance that is given to you 2,000. Now always make it clear, bad debts will always be having a debit balance and bad debt reserve will always be having a credit balance. You may see over here also, here I have subtracted bad debt reserve trial balance, that is 2,000, that I have subtracted over here. It means it is having a credit balance. Ultimately we have given a credit effect only. If you have subtracted from debit side, it means ultimately the credit effect has been given of it. Okay, so bad debts balance, that is 1,500, and bad debt reserve, that is 2,000. You can see bad debt reserve, that is 2,000, and bad debts, that is 1,500. Okay, then afterwards, discounts that are given to you 750 and 1500. Now whatever the debit balance, that is discount allowed, it is one kind of expense, and whatever the credit balance, that is discount received, that is one kind of income. Okay, so whatever the expense that we'll be writing on the debit side of P&L account to discount allowed, that is 750, and whatever the income that we'll be writing on the credit side of P&L account as income by discount received, that is 1500. After completion of that, stamps on hand and bad debts returned. Stamps on hand, that is one kind of closing balance of the stamps. So that will be recorded on the asset side. So stamp on hand is having a debit balance, and bad debts return. It means previously whatever bad debts was there, out of that certain amount of money has been recovered. So that is one kind of income for the firm. So either you can call it bad debts return also, or you can say it bad debts recovered also. Okay, so that is an income for the firm. So you can see on the credit side of P&L account I have written by bad debts return, and you can write by bad debts recovered also over here. That is credit balance 1250, and stamp on hand, that would be recorded as closing balance on the asset side of balance sheet. So stamps on hand, that is 150 on the asset side of balance sheet. Then afterwards 12% HDFC loan, that is 10,000. So that is our liability, because in future we have to pay that amount of loan including interest. So you can see on the liability side that I have written 12% loan, that is in inner column I have written 10,000. Plus, because outstanding interest would be there, because rate of interest is also given, and also the date has been given to you in the bracket. Okay, now that would be a hidden adjustment, that we'll do it later. At present we'll be continuing with the adjustments. After completion of all the entries of the trial balance, now moving on to the adjustments. The first adjustment that is given to you, closing stock rupees 10,000, out of which 50% has no market value. The closing stock, that is actually 10,000. Out of that, 50% of the stock is not having any kind of market value. It means the actual value of closing stock, that would be only rupees 5,000. Cost or market price, whichever is least. Over here the cost price is least, that is only rupees 50% of it, that is 5,000. So we'll consider the value of closing stock not 10,000 but only 5,000. So both two effect of closing stock would be there, because it is given in adjustment. One effect, that is credit side of trading account by closing stock, that is 5,000, and the second effect, that is asset side of balance sheet closing stock, that is 5,000. Okay, then afterwards second one, legal charges included of legal charges of building purchase rupees 4,000. Now whatever the legal charges that was given to you in the trial balance, out of that 4,000 legal charges are related to building. Okay, so we have to subtract from the expense of legal charges. Adjustment will be having two effect. One, will subtract from the legal charges on the debit side of P&L account. So minus building charge, that is 4,000, outer column that would come to 2,500. And the second effect, that will be adding in building, because that charge is related to building legal charge. So we'll add in the concerned asset. So 46,000 plus legal expense 4,000, total that would come to 50,000. So two effect that we have given. One, that we have subtracted on the debit side of P&L account, it means we have given the credit effect, and the second effect, debit effect, that is on the asset side of balance sheet. Okay. Third adjustment, provide 5% BDR on debtors. Now debtors or receivables value, that is given to you 31,000. On that 5% BDR, that would come to 1,550. So 31,000, 5%, that would come to 1,550. Subtracting it from it, that difference, that would come to 29,450. Now the second effect of 1,550, that would come on the debit side of P&L account in the format. You have seen that is bad debt reserve of adjustment, value that came to 1,550. Now add these two values, 1,500 plus 1,550. Total that would come to 3,050. From 3,050 you minus 2,000, remaining balance that would come in outer column, that is 1,050. Okay. Now fourth adjustment, provide depreciation at 10% on furniture and 5% on building. 10% on furniture, already we discussed that in furniture whatever the depreciation that was given in trial balance, that is to be added. After adding whatever the total that comes, on that we have to count the depreciation of adjustment. So over here the total that came 3,300. On 3,300, 10% depreciation, that would come to 330. Subtracting these two values, that to outer column it would come to 2970. In the same way, we have to count the depreciation on building. Depreciation on building, that is given to you 5%. Okay, so 46 plus 4, that was total came 50,000. Of 50,000, 5%, that would come to 2,500. So 50,000 minus 2,500, outer column it would come to 47,500. Now the second effect of this depreciation, that would be on the debit side of P&L account as an expense for the firm. Okay, so you can see debit side of P&L account, I have written to depreciation, furniture and building. Furniture, that is 330, and for building, that is 2,500. Total that came to 2,830. Okay. Then afterwards, last adjustment, 1/3 share of patent and trademark is to be written off. It means write off the concerned asset, that is patent and trademark 2,700. 1/3 of 2,700, that would come to 900. Okay, so 2,700 minus 900, in outer column it would come to 1,800. And the second effect, that would be on the debit side of P&L account. Okay, so debit side of P&L account, you can see that is I've written over here to patent write-off, that is 900. Okay, then afterwards the hidden adjustment is remaining, that is of loan. Loan amount, that is 10,000. On 10,000, 12% interest that would come to for whole year, that would come to 1,200. But we have taken loan on 1st July. Okay, so up till 31st March, it would come to 9 months only. That is July, August, September, October, November, December, January, February and March. So total 9 months interest that you have to count on loan of rupees 10,000 at 12%. Okay, so for 10,000 at 12% for 9 months, it would come to 900. Okay, so you can see that would be outstanding interest. So here you can see on the liability side, I have added over here, that is plus outstanding interest 900. Total that I have written in the outer column, that is 10,900. And the second effect of this outstanding interest, that would be on the debit side of P&L account. So you can see debit side of P&L account, I have written to outstanding interest on loan, that is 900. Okay. Now let us see any of the entry or hidden adjustment, or adjustment is not remaining. Yes, okay. No any adjustment is remaining and no any effect of trial balance is left or pending. Now let us do the total of each and every accounts. Well, here you can see on the credit side of trading account, the total is coming, that is 86,750. Same total I have put on the debit side, 86,750. Difference that comes, that would be the gross profit. To gross profit, that is 41,150 after subtracting all the debit entries. Okay, now this gross profit, that will be transferring on the credit side of P&L account. So there I have written by gross profit, that is 41,150. Doing the total of credit side, that is coming to, after adding these two entries, it would come to 43,900. Putting that total on both the side, here I am not having space, so here I have not written the total. Total that is coming 43,900. After subtracting all the debit entries, the difference that came, that is 30,270. Now this I will not transfer to P&L appropriation account, because we have not prepared P&L appropriation account over here. So this, whatever the net profit, or it will be considered as divisible profit, that will be distributed amongst both the partners in their profit and loss sharing ratio. Here P&L ratio is not given to you, so in equal ratio. So 30,270, that will be divided into ratio of 1:1. So each will be getting 15,135, 15,135. So we will transfer it to the concerned partners capital account. So you can see on the credit side of partners capital account, I have written by P&L account, in bracket I have written divisible profit. Okay, so divisible profit, that is in Harsh and Yesha both are same, that is 15,135, 15,135. Now we'll close the partners capital account to find the closing balance of capital. Okay, so total of Harsh came to 50,135. For Yesha, that came to 30,135. Putting that total on the debit side, difference that is coming for Harsh, that is 45,135, and for Yesha, that is 27,635. Whatever the closing balance, that would be the closing balance of the concerned partner's capital. Okay, so that will be writing on the liability side of balance sheet. So for Harsh, that is 45,135, and for Yesha, that came to 27,635. Total of this two, that would come to 72,770. Okay, now doing the total of the liabilities and assets. see that any of the entry doesn't remain in the inner column without doing the total or the subtraction of it and putting the value in the outer column. After verifying all the entries on the liability side and asset sides, do the total of both the sides. You can see the total of both the sides, that is coming equal, that is 1,11,170, and on asset side also 1,11,170. So our answer is correct. If the asset side and the liability side, it means the balance sheet, if it gets tallied, it means our answer is correct. So that was the end of the sum, students. In the next video lecture, still we'll be continuing with this type of sums. Till then, keep practicing and do refer these sums by practicing it in your notebooks. Till then, goodbye, stay blessed.